her question is, what are the main barriers to holding back fintech development in Central America? And we'll start with Nayid, and then anyone else can raise their hand and come in.
Thanks. Thanks for the question. I think it will be regulation. I mean, people doesn't understand basically what fintech is and how can make people life simpler. I think there is a lot of education that we need to do through the different actors in the entire ecosystem. And as long as we promote a regulation that can include all the fintechs and what we want to do, it will be great. But of course, there are barriers of entry that probably some actors in the entire landscape doesn't want a fintech to come in because it will alter the status quo. But
are these the established banks, Nayid? Are
Yep.
these? Are you basically saying vested interest would be the established banks in some countries?
Exactly. Yeah. Definitely.
Does anyone else want to add to what Nayid said? No, perfect. Well, let me go then. We've really worked hard with this conference to have representation from across Central America. So we had the ambassador of Panama, the central bank governor of the Dominican Republic, etc. But funnily enough, everyone on this panel has some link to Costa Rica. So Jorge, I just want to ask you, I mean, obviously you would have been listening with interest in Nayid's presentation, but I just want to ask you, how can it seems like if Panama is a financial hub of Central America, it seems that maybe Costa Rica is emerging as a technology hub of Central America. So I just want to ask you that. I mean, what are the advantages of Costa Rica as a fintech hub in the region?
Thank you, James. And I apologize for getting started ahead of it. I jumped the gun there earlier. My apologies for that. I thought you're asking me to give an introduction. So anyway, getting to your question, James. Yes, let me just actually start by explaining, because many of the people in this audience might not be aware, that Costa Rica has completely transformed its economy over the last few years. We're no longer a banana republic or an exporter of basic agricultural goods. We haven't been for the last two decades, in fact. Most people still think that Costa Rica's main export is coffee, and to your surprise, it's actually less than 1.5% of our total exports, or bananas or pineapples, which together are less than 5% of our total exports. Our number one export today are knowledge-based services and knowledge-intensive services, such as cybersecurity, software development, data analytics, and all the rest. We have over 350 multinational companies, including some of the most important top, 12 of the top 20 medtech companies in the world. Almost 20 of the top IT companies in the world are operating here in Costa Rica, each one of those with thousands of employees. I'm talking about companies like IBM, like Intel, Accenture, Amazon and Amazon Web Services, McKinsey, Boston Scientific, Abbott, and so on and so forth. Particularly and let me just share a couple figures here, I'm sorry. We exported $5 billion worth of knowledge-based services last year and $4 billion worth of medtech products. So this is Costa Rica today. Most people still think of us as an agricultural or a tourism destination, which we are. Badly beaten, of course, by the pandemic, but slowly recovering. But today we really are a services economy and a high-tech economy, and that's why it makes sense for financial companies and fintech companies to come and establish operations here in Costa Rica. Among those of the large companies in the financial sector, we have companies such as Cinde, as Western Union, Equifax, and TradeStation that have found here in Costa Rica the perfect place to come and do business because they find the right talent. That really is the key to your question, James. Why are they here? They're here because of the talent. Costa Rica has invested heavily in the education and health of its population. And we abolished the Army by Constitution 70 years ago. We took that money and put it into education. We put it into bringing electricity and connectivity to the whole country. We put it into health. And all of that has become, an ecosystem that today is being taken advantage of in the good sense by many multinational companies from around the world, including many multinationals from the UK.
No, perfect. Jorge, I'm going to play devil's advocate here because look, Jorge's just done a great job of explaining why Costa Rica's got all these tech benefits. But Moises, explain something to me. Like, I'm thinking, surely these days, if you're talking about technology, it's global. I mean, do you really need, all right, so you've got this idea, you want to have a fintech app or a super app in Central America, but surely the developers could be in Bulgaria or Poland or China. I mean, why do you need to have developers in the region?
Okay, thanks, James. Actually, we started our development in China, in Singapore, India, and Vietnam. Um, and when we were ready, when we finished the development for the base of our super app, we brought the development to Latin America with teams in Argentina, in Venezuela, Peru, and Costa Rica. And for a huge surprise for us was that agreeing with Mr. Sequeira, the talent of the developers in Costa Rica is quite superior. It's limited. We are trying to educate people with our code to make them more mature in our coding, but at least the teams that we are building are quite sharp, quite a high level, and that's the reason why we are decreasing our teams, our international teams, and increasing our local team and local development.
Excellent, thank you, Moises. I'm getting more questions coming through here, but look, I'm getting lots of questions, but I've just got a question. Why does Central America need fintech? Why is fintech a good fit with Central America? So this model that we talked about the super apps worked very well in Southeast Asia and China. Why is it going to work well in Central America? And I will start with Moises, and Nayid or Jorge, feel free to jump in if you want. But Moises, I'm starting with that with you.
Okay, in Central America, we need fintech, not because of inclusion, because the banking sector has the financial lives of people tied up to the corner, up to a point in which we have very high interest rates. We have very difficult conditions to access to credit. For example, I do not agree that just people internationally look at us as agriculture. The first ones who look at us as agriculture is the governments. For example, it's easier for you to get in Costa Rica a 9,000 loan from the government for your small farm, instead of having financial options for tech development, or for all these new generations that they believe in tech, that they are living tech, and they need ways to develop their talent. So we need a fintech in this region to disrupt, to take out from the comfort zones that the banks and governments are, and to show them that people need to have control of their financial lives, not an institution, not a government. Obviously, we have to tie it up to regulations that are not built, and that they will start a process as slow as everything in this region to be ready. So for investors, I see a huge opportunity to come here to this region, a virgin region, that they really need this solution. Investors kind of feel not comfortable with the region because of political unstable countries, or maybe small markets. But actually, that's a huge opportunity for these markets, because you don't have to take over a market share. You are able to take an absolute metric. In these countries, you are able to eat the whole market, because the whole market needs a dynamic, a tech solution that makes money flow the way the people is demanding it.
Excellent. Thank you, Moises. I've got a question for Jorge. When you were invited to speak in Costa Rica, it was because of the relative success of Mexico. So Mexico is recognized as the leading fintech hub in Latin America, slightly ahead of Brazil. And I would say, being very simplistic as we journalists tend to be, I would say there's two reasons why Mexico is a successful fintech hub. One is, the ingenuity and intelligence of the Mexican people, but the other one is that you're next to this massive venture capital, startup capital, angel investors from the US. So there must be lots of funding flowing down and lots of also business ideas flowing down from the States. My question for you is, does the fact that Central America is next to Mexico, the leading fintech hub in Latin America, will that help the development of fintech in Central America? How far can fintech in Central America go? Can it become as big relatively as it is in Mexico?
I think so. And as you mentioned, just about venture capital, I think every time more Mexico is attracting more investment. We have seen that in the last months. We already have the first crypto unicorn in Latin America, which is some friends of mine, the guys from Bitso. And there are many startups attracting capital in Mexico. Then about Central America, I think most of the fintech companies in Mexico, we want to expand to other countries. But there is one advantage to expand into Central America as per my view. That is, Mexico, one of the problem is that it's too big to try to scale up, because you have to form ecosystems, and it's very difficult to form an ecosystem if you have a big economy. So like, for instance, in Mexico City, where most of the fintechs are based, you cannot really see that much common use, like everyday use of the fintechs, because this is such a huge city. Like, for instance, our strategy in Tantan, in our wallet, is to reach out to small cities or even populations, really, really small towns in Mexico, so we can start creating an ecosystem. So I think there is an advantage that Central America has. Once, you can, like, for instance, Costa Rica, you can really move faster in Costa Rica, because once you start creating an ecosystem, and it's a game of networks, right? So you have to create your network. That is the name of the game. So I think it's easier to create that in Central America. So I will say there are a lot of opportunities in Central America, and perhaps it's better to start there than in a country as big as Mexico.
That's fascinating. Thank you, Jorge. Look, I would just like to add something here. I'm very fortunate that I know Central America quite well. Obviously not as well as most of you gentlemen, but yeah, I know Central America quite well. I've been to each of those countries maybe 5 or 10 times each, and interviewed people there. One thing that always strikes me is that Central America, it's a small region, but there's a surprising amount of difference. There's a big difference, let's say, between Costa Rica and its neighbor Nicaragua. There's a surprising amount of cultural difference for such a small region. It almost reminds me of Europe in that way, that you get these smaller countries that have got quite a lot of difference. I just want to ask, and I guess this is probably towards Moises and Nayid and possibly Jorge, those cultural differences, are they a barrier? Does it mean that you have to kind of reinvent yourself each time you go into a new country to win the hearts and minds of consumers there?
Actually, that's an advantage for us, for our strategy. One of the main things we learned from Grab in Singapore is how to be local. Grab is a company that was established in Singapore, one of the smallest countries in the world, but they run the biggest super app for all Southeast Asia, for like 10 countries, extremely bigger than Singapore. So we think exactly this, that we took the same strategy for our deployment in this region. Every country, there are a lot of cities, and they need to have a product very localized. Even when we talk about Mexico is a country of countries. You need to take each city with a different taste. Even in Costa Rica, such a small country, we cannot treat our users from the Caribbean coast the same way we treat our users in the Pacific coast, and the same way with the north, with the central metropolitan area. It's a matter of a strategy. Maybe you can think that will be more complex for your operation, but at the end you will have a bigger revenue and a bigger attachment and from your users, and a lower bounce rate from the users.
Excellent, thank you. Look, I'm getting these questions coming through, so I've got to feed them into the chat. One lady who, she's from El Salvador. Her surname is Bukele, but I'm sure she's not related to the president. Jessica Bukele, she asked about Ingo. So Ingo apparently, and look, I don't know about Ingo. I know Nayid mentioned it in his presentation. She mentions Ingo. She says it's the app. Oh, no, so not Ingo, sorry. She says there's another app similar to Ingo called Hugo, and it's operating in six countries in the region. And so she's talking about this other app, but she's saying it's very similar to OMNi. My question is, and thank you for that comment, Jessica. My question is your competition more from other apps like Hugo, or is it from the banks and the vested interests?
Okay, actually Hugo is food delivery, and they do not represent any competition for us. Actually, they failed in Costa Rica, so I would like to take advantage of this forum to let them know that we are quite open to partner up with them, to support them in their expansion into Costa Rica. Here we have international players like Uber Eats, like Rappi, like well, now it's Pedidos Ya, but it was called Globo. So we are quite supportive to talk with them and support them into Costa Rica. We need a regional solution for our people. We don't need international solutions that they treat the whole world with the same recipe.
So Moises, is that because you're a super app? You've got the flexibility where you can work with a local player like Hugo, and if you were just a single purpose app, it might be more competition. But because you've got so many functions on your app, you're willing to work with them.
Exactly. Actually, we took 2 years to develop a super app base in which we could do a plug and play of any service. The idea was to create a lab in Costa Rica in which we have a fintech heart, and we create many usage solutions for our fintech environment. So now in each country, we can plug and play a super app with a fintech heart, but we put in the usage case that each market needs. It's not a matter to put bikes, taxi, food delivery, e-commerce in each country. It's a matter to find what the market really needs. So you do not drown the market, you do not waste money, you do an efficient deployment in each city, bringing solutions to the people, solutions for the real needs. So you create, again, a real attachment to the platform and to the experience that you are selling to them.
I'm very pleased that the audience are doing my job for me and coming up with some great questions. So a gentleman called Charlie Ricciardi has got a cracking question. Look, he raises the point that in Central America, you have anti-money laundering issues. So let's say, for example, Panama being on the FATF grey list, and in different parts of Central America, money laundering is an issue. Yeah. He asks, does the fact that money laundering is so sensitive in Central America, does that create challenges for fintech? Or is it a way for you to try and find a solution where you can prove to US regulators that you're not a platform where money is being laundered?
Yeah, money laundering is the first thing that everyone argues on any expensive development. In this region, tech is not culture and it's untangible. So for example, right now, we have invested over $40 million in our development. If we convert that investment into a building, for example, will be the biggest building in Central America. So everyone will feel comfortable with that kind of development. Money laundering is not a big issue in Central America. Central America is a bridge for drug money and for dark money. but the real the money goes straight from Mexico to Colombia and that way. So we are a collateral damage in this shady activity of money laundering and drug money and all this.
But Moises, I would agree with that. Sorry, Moises, sorry to interrupt. I would agree with you about collateral damage, and I've interviewed Panamanian finance ministers about this topic. But the point is, that's the way the world works. You know, you could argue that the US regulators are hypocrites because look at what's going on in Delaware, or we in the UK are hypocrites. We've got our own tax havens, but that's just the way the world is. The fact is, Panama is on the grey list. The fact is, international investors do get nervous. The Panamanian ambassador is giving me a wave. So, gentlemen, I'm going to give the mic to the Panamanian ambassador. Ambassador Royo, your country's been mentioned here. What would you like to say?
Okay, thank you very much, James. And I think it's a very good question. I just want to clarify that Panama is making so much efforts to get out of their list. We are implementing like so many laws, so many things to get out of this list, and at the moment we are 97% implementing this let's say advisors of the OCDE. The thing is that what they ask us is that we have to prove that it has been implemented. So that means that only time will get us of the gray list. But to answer the question, I really think that we have a very good opportunity, because since if we're going to be able to, as governments, for sure we need to establish a legal framework for these startups to flourish. And that will be the important thing, because in that way we will be able to make more traceability of the money. So I think it will be, we have a very important challenge as governments. So I really support these fintechs. I think that it will be a good way for governments to control, and not to control, because we have to make a balance. To at the same time you will be free to flourish, but to have that legal framework, I think it will be very important, and it will be done with the help of you that are doing the in contact with the people and the needs of the people also.
Excellent, Ambassador. Thanks for jumping in there. That's great. Look, Jorge, I want to ask you a question. Actually, before I do, Moises, do you want to reply to anything the ambassador just said? Because I did cut you off halfway through.
No, actually, I'm quite grateful with the Panamanian government. Our company is hosted in Panama because of the advantages we can get to fight this international competition on fintech. So we are all good with that.
James.
No, great. Look, Jorge, I've got a question for you. Mexico's fintech regulation is very, very interesting. And I think what's interesting about it is because you're so close to Central America, people always think what bits could be copied and applied to Central America. So I just want to ask you about open banking. We've had a question here from a gentleman called Francisco, I think it's Lozano. I can't see the full surname, but Francisco's asking about open banking. And he seems to be saying that open banking could actually disrupt fintech. You know, you guys who are meant to be the disruptors could be disrupted by open banking. Please, and look, not everyone who's watching today, and especially not me, is going to be a fintech expert. So please just explain the theme of open fintech and of open banking and how you think it could impact fintech in Central America.
Sure, James. I have said that besides the creation of two new entities, the crowdfunding entities and the wallets within the fintech law in Mexico, the most interesting article, which is the Article 76 of the law, is the open banking article, which is now called in Mexico open finance. So it's kind of trying to make a broader aspect of that. I think, I mean, many fintechs, they think that just because you will have access to the information that belongs to the client. That's a very important concept, and that's how we promoted that article. The information, the data belongs to the client, to the consumer, to the person, not to the institution. That's the important part. But many fintechs think that once it is completely established, the standard, that you will become like the next unicorn just because accessing that data. Of course, there is that possibility. But what I think, and I used to be a banker many years ago, I think the incumbents, the traditional financial institutions, they could take more advantage of that because, like for instance, the BBVA is the largest bank in Mexico, right? So they have, if you see it like a puzzle, they have more pieces of that financial life of every person than any other institution because they have the most of the clients in Mexico, right? So they will be able also to access the information in other banks and in other entities. So I think, I mean, for the incumbents, it's kind of a message for the incumbents that they shouldn't be afraid of open banking. They should embrace open banking because they have more to win, and also they can create better alliances with the fintechs. The challenge for the fintechs, once you land into that ocean of data, is that you have to be able to capitalize on that, which is not a simple function, right? So I mean, I think open banking should be embraced internationally and even with the same standards, so that at some point Mexican institutions can connect to Central American institutions, whether it's an incumbent or a fintech, and also connect to institutions in Asia. So I think in the future, open banking will become an international standard for everybody to connect. And I think it's a great opportunity if you start thinking on the client. I mean, the products that could be developed, accessing that information should benefit the client. If at the end of this journey, we end up with great unicorns, with new companies, but the benefits are not passed over to the client, open banking won't succeed.
Excellent. Thank you, Jorge. We've had Jorge, I love the fact that you're sitting in some trendy hipster cafe in Mexico City. That's the most tech thing about this panel. I love it. And here am I with my suit and my little bookshelf.
My suit there in the wardrobe, I now wear hoodies.
No, it's perfect. I want to work for a tech company. Look, a lady called Brenda Guerra has asked a question which kind of ties in with an important theme. So you talk there, Jorge, about data and about, you know, the people's data belongs to the clients. Brenda Guerra, she asked Nayid and Moises, what is your plan so that the clients feel secure using your app? So I guess we all see stuff about different hackers, about data breaches, and drawing on that in Central America or in Latin America. So I'm in Ecuador right now. In Ecuador and in Latin America, lots of people don't feel very confident about giving their bank details online or to an app. There's kind of like a cultural barrier there. So there's two questions, Moises, Nayid. What are you doing so that Central Americans can feel secure using your app? And also, how are you trying to overcome that cultural barrier? Maybe it's an age thing, maybe I'm old, maybe this doesn't apply to younger Latin Americans, but what are you doing to the cultural barrier where people in Latin America still feel uneasy about buying stuff online?
Mm-hmm. Yep.
Or banking online?
Yep, thanks, James. Well, first of all, we're using top-notch solutions that I mean, first of the world neobanks use it as well. We work with companies such as AWS, Shield, that works worldwide with the best in the group. And one of the things that we're doing is communicating those partnerships to our customers so they can feel secure. And I mean, these questions goes, you can answer as well with the question about AML and KYCs. One of the great things about fintech is, as the name says, is financial technology. I mean, there are, all the processes on AML or KYCs are done online. I mean, with already proven solutions and technology that we know it works, that has been approved by regulators in the primary economies of the world, and that's the kind of tools that we're using in OMNi, and that we're putting on the service of our customers.
That's perfect. So sorry, Nayid, that's perfect. You're completely right. Fair enough. You're using these like industry-leading scrutiny measures, but the cultural question: how do you convince the Central Americans?
Well, you need to educate it. Yeah, I mean, you need to go to the people. I mean, there is one singular number that hasn't been said, but taking out Costa Rica, between Mexico and Central America, it ranges, but between 40 and 60% of people is unbanked. All right, so that's the huge opportunity, market opportunity. I mean, there you go. There is one. But I mean, you need to go, and that's one of the main challenges. You need to go and teach them how to use it. One of the main things and one of the main challenges that we have been in the last 2 years that we have as a company is, how do we educate them? Well, it's a process. Some of them goes through, webinars. Some of them goes through online. Some of them we need to go to their cities and put our people over there, and for 2 or 3 weeks just explaining how to use an app and how they can do the lives easier. But of course it's a challenge. I mean, but you just don't solve it based on technology. That one, you need to go on your feet and go to the cities and explain them, definitely, especially financial services.
Thank you, Nayid. Look, I got this chat box, which only shows up to me now, the panelists, and there's a bit of a debate with different questions coming through about the unicorns in Central America and the biggest tech companies in Central America. Jorge, I've got a feeling you might have something to say about this, because I think there's a debate, but I think actually the Central American unicorn is in Costa Rica. Can you educate us on that, Jorge? Jorge Sequeira.
Yeah, sure. No, just very quickly. In fact, yes, the first regional Central America and Caribbean unicorn is a company called Establishment Labs. It was born here in Costa Rica. It's a great success story. They're valued today in NASDAQ. The ticker symbol is ESTA, and they're valued at about $1.7 billion. And they have a radically innovative breast implant solution that is really transforming that market. So yes, that's a very interesting story, even though it's not related to fintech, but it was important just because I saw the chat there to mention, because we do have our own unicorn at this time.
No, we definitely don't want disinformation. It's interesting, when we're talking about unicorns, which are obviously tech companies with a valuation over 1 billion, most people here will have seen the recent merger between Gojek and, got this in my notes, between, who was it, Moises? Gojek and Tokopedia. And that merger created a new group, the GoTo Group, which is worth $20 billion. It's got a market value of $20 billion. How big could a Central American fintech company become? Because obviously the GoTo Group is operating in Southeast Asia, where you've got 600 million consumers. How big in terms of market value, because that's what interests my readers, that's what interests investors, how big could it become in terms of market cap?
Okay, my thought on this is that the difference between Indonesia and these countries is that in Indonesia, you fight banks the same size that market. In these countries, you fight banks that they are playing the same booklet they have since 100 years ago. They want to take your savings, they want to offer you expensive credit, and people already know the game. So they want new solutions. So in these countries, you can think in the whole market. That's why we want to bring more usage solutions, because we are quite confident that the people is going to trust a freedom in their finances with these fintech solutions. So we need to keep them into this environment. I know Nayid won't like what I'm going to say, but the real thing that we are building is a new digital central bank, a new environment in which people can move, can do their transactions, can bring their businesses, their ideas, they can process their payments. We launched this OMNi project in Costa Rica 2 years ago. And the main stopper we had was payment processing. Not a single bank wanted to process the payments for tech industry. So right now, actually, we do not work with a bank. We work with a cooperative of financial services that they support the idea, since the cooperative model supports the people. So we start that way. We are looking for our verticality. We already developed our own processor, and as Nayid said, now we are providing this solution to many tech companies that they were tied up completely because they had no way to put money in or out their systems. So coming back to the question, I think the huge opportunity in this country is that you have no competitors and no stoppers. It's a matter just to work in this kind of market.
Moises, I love a controversial panelist, and you've already insulted the governments, the banks, which is great. I love it. I'm just glad that the central bank governor of the Dominican Republic wasn't here to hear your plans about becoming a digital central bank.
Actually, yeah, excuse me. Actually, I was very impressed about the speech of Mr. Valdez. Quite open. He really knows that this is a need, and this is a need for transformation and to take new measures for security, for example, for the users. As the last question you mentioned, we are creating this culture of cybersecurity here. The tech industry is the ones creating this, but this problem is not a 5-year problem. This problem has been in every economy since 30 years ago. Cybersecurity has been a huge issue. I will ask every people listening to this to ask their current traditional banks, what do you do for cybersecurity? The 99.9% of the cybersecurity attacks or issues are because of credit card lists published in dark web. No one believes us, but for example, in our QR environment, we don't have a single case of fraud. There is no fraud on QR payments. Fraud is born on cards because cards is an instrument with more than, I don't know, 50 years old. It's time to move.
Thank you for that. I really wanted to wrap this up, and this is quite a vague, ambivalent way to wrap this up, but hopefully this will work. And what I really want is a vision of Central American fintech. And if I sound hesitant, it's because I'm trying to think of a time frame. So I guess 2030. Probably for you guys, 9 years is a long time in the tech industry, but let's say 2030. Now, from what you've been saying, I'm kind of imagining this vision where maybe Panama, I mean, you yourself mentioned that your company is based in Panama. Maybe Panama is where a lot of the financial institutions are partnering with the fintechs. Maybe Costa Rica is where some of the development is happening. But I want you guys to give me a vision. What will Central American fintech look like in 2030? And this is open to all of you. So Jorge, you can tell us if you think it's going to be like Mexico or how it will compare to Mexico. Jorge, Sequeira, you can tell us if you think Costa Rica will have grown its capabilities. And of course, Nayid, Moises, you can tell us what you think OMNi will be. Jorge Ortiz, thank you.
I think by 2030, I mean, it's plenty of time. And I really see, I mean, in China, it took 3 years for Alipay and WeChat Pay to become what they are. They launched it in 2014, and by 2017, they have achieved over 1 billion users, at least WeChat. So, and we're talking about that they were using technology from 7 years ago, 2014. So I think it is achievable for the entire Latin America, not only Central America or Mexico, but for the entire Latin America. And definitely by 2030, I see that everybody will be using a device to make all their fintech life, at least, and that we will have a really strong, connected ecosystem among all Latin America. This dream of a Pan-American Union that become, I mean, it's there for hundreds of years of becoming a Pan-American continent. I think is achievable, at least in the fintech industry.
So I see the fintech might achieve what Simon Bolivar was unable to do. I love it.
Quite a lot of history, my dear James.
It's those books in the background. Excellent, Jorge Ortiz.
That book, so it's
that is great. Thank you. Now I will move over to Jorge Sequeira. Costa Rica, we've been hearing lots of positive things. Do you think by 2030 you guys would have cemented yourself as like a fintech hub in terms of development?
Thank you, James. And I will actually leave my colleagues who are much better prepared and informed precisely on the fintech numbers to answer your crystal ball question. But I will say this: I think that Costa Rica is ripe for fintech investment. We have 80% internet penetration. About 70% of our population has a bank, which is way above the average in the region. And an interesting number I just found out: 60% of adult population in Costa Rica has already made or received payments through mobile devices. And that's pretty impressive, again, when you compare that against figures not only regionally, but globally as well. And in terms of phone penetration, for example, we have 1.5 mobile phones per person, again, one of the highest, certainly in the region, but also globally speaking. And we have 94.2% mobile internet penetration. So all of these are numbers. I'm a man of numbers, as you can figure out. I think speak for themselves in terms of the availability of a good ecosystem here in Costa Rica, the good environment. We already talked about how we have already a very proven track record in terms of having the right talent and overall ecosystem to bring IT companies in general. We have already, if I'm not mistaken, and my colleagues here can correct me, about 25 fintech startups here in Costa Rica in different areas of payment, alternative financing platforms, business finance management, technology companies for financial institutions, etc. So we're already doing it, and I think that there will be, I would guess that there would be eventually a convergence of all these startups, that are flourishing in our different countries. Eventually, they will be absorbed by larger companies and start becoming themselves larger, and I would see some consolidation definitely by 2030 for sure. That will happen.
Excellent, thank you, Jorge Sequeira, man of numbers. And finally, to close the show, we've got Moises and Nayid. OMNi 2030. I bet your investors ask you this all the time. I bet every time you go on an investment roadshow, people want to have a long-term vision. Share it with us. Or don't share it with us, as you prefer, Moises.
Look, okay, for 2030, as Jorge said, there is plenty of time. I cannot lie to you saying that we have plans for 2030, but at least for 2025, we hope to achieve all this real inclusion of the financial services through fintech to all these populations. Plus, I do agree about a financial union in the region. I think it's the only way we can fight together bigger players. For example, in Brazil, Nubank is a huge player, and they come from a market that gives them the strength to eat the rest of the continent. The same happens in Mexico, but in Mexico there are a lot of players. So I do agree that there can be a union of financial of fintechs all around this region by 2025, plus a more mature and a bigger acceptance from the people, and let's not say acceptance but understanding of how we can give the freedom to people to decide what to do with their money and how to move it and who to let see it.
Excellent. Well, then that leaves me with nothing else to do than to thank the ambassador, to thank Cristina Cortez, to thank the governor of the central bank, to thank Moises, to thank Nayid, to thank. One thing I realized very late on is that there's two Jorges. So I kept on saying Jorge and it wasn't quite clear, but at least I'm going to get this right. Thanks, Jorge Sequeira, and thanks, Jorge Ortiz. And finally, I'd just like to pass over the microphone, I think, to Cristina, our event partner, Canning House, so she can give us some closing words.
Well, really, after that fantastic discussion, James, I mean, all I really want to say is that was a superb and fascinating discussion. And I'm really quite excited about the idea that by 2030, Central America is going to be united financially and taking over the world by the sounds of it, or at least Latin America. So this is really exciting stuff, guys. So thank you so much to all the speakers. You've been absolutely brilliant, especially for those who, like me, have their financial banking history is a long way in the past. So we're talking about when the dinosaurs had bank accounts. But above all, thank you to James for those incisive questions and the way you fielded the questions from our audience. Wish you all the very best and hope to see you again soon.